Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thanks for coming on today.
Good afternoon.
Well, stocks on Wall Street closed lower overnight ahead of the Fed's meeting this week. The Omicron variant also seems to have been a factor. The S&P off by around 0.9% and the Nasdaq by 1.4. What's the story in the global markets?
Yes, if you look at the Dow Jones, it lost about 319 points, and also S&P fell by 0.9%. And Nasdaq was hit the most by dropping 1.4% on Monday. Main reason for that is because investors continue to remain cautious ahead of the central bank decision this week. As you know, the consumer price index has risen by 6.8% year on year on Friday. And despite that, we saw market rising. But I guess after the weekend's over, people are just being very cautious about how Fed might react to that kind of number. Most of the people are expecting that the tapering will be accelerated, meaning that about 300 billion of reductions per month, and meaning that the tapering might be finished by end of March of next year. On top of that, most of the experts are expecting that the rate hike will happen sometime in the second quarter of next year. If that's the case, that is a lot faster than previously anticipated, and that is causing the volatility in the U.S. market. Also, the Omicron issues are making some big effect, where if you look at the biggest losers of yesterday, American Airlines and United Airlines and Carnival's, these stocks were down by more than 5%, meaning that with Corona stocks, so-called, with the COVID-19 going away, the expectation of the sales and earnings will be picking up for these stocks. But with the Omicron issues, then maybe the recovery might be slower than expected, and that is making prices go down. But on the other side, if you look at the Moderna and Pfizer and BioNTech, also quite a bit of surge yesterday because of the Dr. Anthony Fauci said that COVID booster shots are optimal care.
Right, and some of those concerns here in Korea too, stocks closing lower today. The KOSPI again below the threshold of 3,000 points. Some significant selling by foreign investors, display panels, electronics, among those leading the declines. And the KOSDAQ, though, just barely holding on to 1,000 points, a key threshold. Tell us about the domestic market.
Yes, as you said, the KOSPI was down by about 0.46%. Right below 3,000 level, ending at 2,988 points. And KOSDAQ actually declined by 0.3%, but remained above 1,000 territories. The main reason for decline is obviously, as you said, foreign investors and institutional investors were net seller of the market. If you look at the foreign investors, they sold 359 billion won worth of Korean KOSPI-related stocks, and institutions sold about 200 billion, while the retail investors are the one that buying by about 514 billion or so. Looking at KOSDAQ, it was a little bit different picture, where foreign investors were net buyer by about 43 billion. Whereas the retail and institutions were selling the index. All in all, I guess because of the U.S. uncertainty with the tapering and Fed FOMC meeting on the 14th and 15th, we think the volatility should remain to be so for Korea as well. Because, as you know, the Korea's uncertainty remains on the currency side. Right now, Korean won has not been really appreciating per se. It continues to remain at 1180 territories, and that affects the foreign investors' sentiment. If the won appreciation is expected to happen, then foreign investors will not be seller of the market. But nevertheless, for the time being, the volatility remains quite high. However, though, if we look at the overall fundamental numbers, and if we were looking to the next years, and we'll be talking about export numbers as well, but in any case, we do think that Korean fundamentals look quite intact, meaning that next year we are looking at probably KOSPI index doing relatively better than even U.S. market on the basis on fundamentals and valuations.
Well, as you alluded to, Korea's exports have already set a new record this year, and in a couple of weeks left in the year, they're on course to surpass 640 billion US dollars. Globally, of course, there's been a lot of economic uncertainty. So what's behind this surge in exports?
Yes, if you look at South Korea's export, it achieved a record high number this year. This is thanks to the very strong performance of not only promising items such as semiconductors and automobiles, but also there were new growth engines coming in, such as biohealth products, as well as the secondary batteries among the global economic recoveries after COVID-19. Biohealth, as well as the secondary batteries, this is some kind of structural change that you are seeing. We are seeing that the gasoline-based cars transitioning to electric vehicles, and Korea is in good position to provide the parts and goods related to that industry. So it seems to be showing quite a strong growth numbers. On top of that, obviously, a lot of the economic growth-related industries, including shipbuildings and petrochemicals and all those, seems to show very strong numbers. So that's why we saw the record highest number of the export. The Minister of Trade and Industry and Energy have cited that the leading role of major export industries. They talked about also progression of new export items and high value added exports, such as driving forces behind achieving the record high export performance beyond 2018 numbers. As you said, the total amount is expected to be well above $640 billion, which is the record highest numbers. And therefore, we do think that that is making and be able to see that Korea is in a good position in terms of economic growth rate as well as the stock market performance in 2022.
And now, meanwhile, we had seen Korea's import prices rising for 6 months in a row, but they declined in November with oil prices coming down significantly. What do you see happening on that front?
Yes, this is a very important factor. Korea is, as you know, they do not produce oil. Obviously, they import most of the oil, so all of the oil basically. So if the oil price rises, then the economic growth rate goes down. Based on historical analysis, $10 rise of oil prices means about 0.4% decline of GDP growth rate. So that is quite significant. So oil prices rising to well above $80, that caused the cost of goods to rise, and which is definitely negative news for the overall operating profit margins. However, as you said, the November numbers are showing that it is declining. It's gone down by about 1.6%. And obviously, this will have a relatively major impact in terms of the import prices. Lower the import prices, obviously, higher the profit margins or operating profit margins. We do think that this should be continuing going into the future. However, some people are saying that the export prices are going down as well, which will not affect the overall margins that much, as the cost as well as the selling prices are going down together. However, though, we think that the dependency on the raw materials and oils were quite significantly more so for Korea. And in terms of the price implications, it's much stronger than the export numbers, because a lot of the exports are actually manufactured goods, and therefore the price rigidness remains to be good. So all in all, we do look into the export and import numbers. We do think that Korea is in good position in terms of the net export, which affects the GDP growth rate.
Got it. All right, Mr. Yu, we'll leave it there for today. Thank you, as always, for sharing your insights. We appreciate it.
Thank you very much.